Positive cash flow for real estate investing. What is it? Why is it important? And how do you calculate it? If you're new to real estate investing, this is only one of 4 elements of real estate returns. In today's video, we're gonna go over all the factors related to positive net cash flow so you can determine whether or not a property falls within your investment objectives. This is how I calculate the cash flow for myself and for our clients. And by the end of the video, you're gonna get clarity on how to choose the proper real estate investment. I'm going to take you on a real world example of a Calgary property that we're helping our investors buy. So if you wanna know how much in positive net cash flow this investment property makes, make sure you watch until the end. If you're new to our channel, my name is Felix Chan, Calgary Realtor and Mortgage Broker with the LiveInnerCity Real Estate team, where we share our best tips on real estate and mortgages. So if you don't want to miss out on any videos, make sure you subscribe. So what is cash flow? In real estate, cash flow is the difference between a property's income and expenses. The higher the cash flow a property has, the better return and more income the real estate investor receives. The best way to think about this is to view your income property as a business. Your tenant is your customer because they're the ones that pay you, and your mortgage payments along with other monthly expenses is your rent. So your goal is to always have a higher net positive income than your expenses. If you have money at the end of the month after paying your expenses, then you are positive net cash flow. If your rental income doesn't cover all of your expenses and you have to pay out of pocket, then you are negative cash flow. Some people are okay with negative cash flow as you're still paying down the principal. And if you want to know the power of principal pay down, check out the video I just did up here. For me personally, I would never buy a property that has negative cash flow, but for some investors, they're okay with that because they can make it up in different areas of real estate returns, such as appreciation. Now, if you want to learn how to choose properties to maximize the value of your income property, check out the video that Jazz did up here. Okay, let's dive into a real world example that we are helping our real estate investors buy here in Calgary. 84% of our viewers on our channel are not subscribers. So if this is your first time watching our videos, then to give you some context, please refer back to the video that we did called What a $460,000 Calgary investment property looks like. You can also check it out here, and I'll leave a link in the description below. And if you find our videos valuable, then make sure you subscribe to our channel. We come out with videos every single week. Now with this example, this is a real income property in Calgary that we've been helping our investors like you buy. It is a brand new build with a very reputable builder, and it is a half duplex with a legal basement suite in the newer communities of Calgary. Prices have gone up due to construction and lumber costs since we made that video, so the exact same model now costs just under $500,000 at the time of recording this video. Okay, let's dive into the numbers. Let's talk about the debt service first. Now the price is $495,000 with a down payment of 20% is $99,000. Your mortgage is gonna be $396,000, your rate of 2.49%. Amortized over 30 years, your monthly payment is gonna be $1,560. Now for rental income, the upper suite will rent for $1,900, that includes utilities, and the lower suite will rent for $1,200. Again, that includes the utilities, for a total income of $3,100. Operating expenses. Now, the property management, you will get 2 years of free property management with us. The property taxes estimate to be $308 per month, insurance $150, vacancy rate of 4%, $124, utilities about $550, repairs and maintenance, which is 2% of the gross income at $62. So your total operating expense is $1,194. Net income. So your net operating income is gonna be $1,906. So your cash flow after your debt service is $346 per month. If you don't count vacancy or repairs or maintenance, which is $124 and $62, it equals to be about $186. So if you add that to the cash flow, it's actually $532 per month. Now for me personally, I've had maybe 1 month of vacancy through my years of having my rental property here in Calgary. So I don't include vacancy in my personal cash flow numbers. Now full disclaimer, this is not financial advice. This is for entertainment purposes only. And these numbers, I mean, they can change depending on when you see this video, such as the price or even the rates. But this gives you a ballpark figure of what kind of cash flow you're looking at when looking at this type of income property in Calgary. Now here's the truth. If you manage your property correctly and you stay on top of your tenants, then there's really no reason why you should have vacancies. Here's the biggest mistake that I see people make. Now for some reason, people will spend $500,000 on an investment property, put a tenant in there and never visit the property. They take a relaxed, reactive approach, meaning they're only at the property if there's something that requires attention. Now, this is when tenants start doing whatever to the property, and this is where you hear a lot of the tenant horror stories from friends or colleagues, but it's because they're mismanaging the property. I know I mentioned this before, but this is so important, I have to say it again. The best way to minimize your risk and maximize your real estate returns is to treat the income property as a business. The tenant is your client because they're the ones that pay you. The mortgage is your rent, and you need to make sure that your business is taken care of with regular maintenance and ensuring that your tenant is a happy customer. This will take you from having a reactive approach to a proactive perspective. So guys, here are the main takeaways for real estate investment cash flow. Number one, some real estate investors are okay without cash flow because of the mortgage paydown or other elements of real estate returns. If you want to know more about the power of mortgage paydown or other ways of how to get real estate returns, check out my last video I made here. For me personally, I think having net positive cash flow for your income property is important. I also advise my clients who are interested in buying condo rentals to have cash flow because condo fees go up over time. Number two, there are no right or wrong ways to calculate cash flow. Some people add 4% vacancy rate and a maintenance and repairs expense, but if you're buying a brand new property like the example I just shared, then something like the maintenance and repairs may not be a big deal for some investors. Number three, at the end of the day, before you buy an income property in Calgary, you need to determine two things. Number one, what kind of investor you are, and number two, what are your investment objectives? Answering these two questions will give you direction and you can be more intentional with the properties that you look at. If you're a first-time investor, it might be a little overwhelming answering these two questions, and you might miss some important considerations. So feel free to reach out to our team and we can help you determine these two key elements before you jump into real estate investing. If you didn't know, we have an entire real estate investing playlist that will tremendously help you to buy your income property. So whether you're a first-time investor or a seasoned one, you will learn a thing or two. I'm gonna leave the playlist, the link in the description below, or you can check it out here. And don't forget guys, the properties that I showed you in this example is available and prices have been going up because of construction and lumber costs. We've helped other investors buy into these projects because people want something that's easy and hands-off. They are brand new, there's no maintenance you have to worry about for many years, and you get 2 years of free property management. Something that you will not get if you approach the builder directly, as it's an exclusive deal with our brokerage, Redline Real Estate. If you've learned something new about real estate investing today, please smash that like button and hit subscribe so you don't miss out on future real estate tips. That will also help our channel reach out to more people searching for this type of real estate investing content, and you would be also supporting us as well. Don't forget to watch the real estate investing playlist. My name is Felix Chan, Calgary Realtor and mortgage broker with the LiveInnerCity real estate team, and we'll see you in a few seconds.